Good morning. Welcome to Stock Market Today. It's Wednesday, September 2nd, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Shaken Analytics. You can find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Shaken Analytics. Head over to shakenanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. Also give you daily stock ideas to consider, and that hits your inbox every trading day before the market opens. So U.S. equities were higher in Tuesday's trading, ending near the best levels of the day as the S&P and the NASDAQ recorded record closes once again. Growth outperformed value again on the day. At the sector level, materials, tech, and discretionary led the charge. Treasuries were stronger with the curve flattening. Dollar was better against the euro, a little changed against the yen. Gold ended slightly higher, and WTI crude was up 40 basis points on the day. So we had hopes of accommodative policy continuing to be a tailwind for the equity market. At the same time, the ISM manufacturing report surprised to the upside, continuing a string of bullish surprises from economic data sets. Additionally, some of the global economic data points out of countries like Germany, China, and South Korea were better than expected. As we get to the desk this morning, S&P futures are following on, adding 70 basis points after that rally to start the month yesterday. Asian equities were mixed overnight, with Japan trading higher, but China trading to the downside. European markets are seeing strong gains. Treasuries are weaker, curve is flattening, the dollar is stronger on the major crosses. Gold is down 20 basis points. WTI crude is up 30 basis points to kick us off on a Wednesday morning that starts with, a resumption of the new highs for the S&P 500. Looks like for now it was only a one-day pause in the new high streak, at least on a closing basis, as we closed at a record level yesterday after not closing at a record level the previous day. 3,300 to 3,400 remains support, 3,400 being the key at the breakout level. I've given you the line here on the chart. We're above a rising 50-day, above a rising 200-day, so by definition, we are in an uptrend. Should we break down, we have to think about 3,250, call it 3,250, 3,275, but this 50-day continues to move higher. Trading at record highs, so no price-based resistance, although we can start to look at some of our extension levels and pretty easily come up with 3,700 to the upside should this continue and should we remain above the breakout level. Overbought in the near term, that does remain the case. And the same goes for the Qs. The only market that's not overbought is actually the IWM, the small caps. And we'll take a look at small caps a little bit later on in the show. Chicken money flow remains strongly bullish, trading up here near one-year highs. So indicators confirming the price strength that we are seeing. Overbought within the context of an uptrend. I mean, just the song remains the same, really. You have your names. Hopefully you've, in your individual stock portfolios, you've skewed them in the directions that we've been talking about. Areas like growth, tech, discretionary, comm services, a little bit in materials and industrials. So you're riding the wave. You're moving your stops up. You have your risk management process in place, and you are riding the wave higher for the equity market. Let's get our market in a minute now. What are we writing about today? Well, new highs for the SPY and Qs as the growth rally powers on. Again, growth was your leadership. So monster moves in a lot of the NASDAQ names yesterday. You can see the big NASDAQ outperformance in just a moment. IWM holds above important support. That's interesting because should we get a resolution to the upside, to me that adds an added breadth confirmation to the move higher in equities. We do have mixed trends in sentiment and positioning this week. I go into a lot of detail in my note, which you'll receive if you're a Shaken Analytics client or if you are taking the 14-day trial. Relative strength did dip, however, in small cap growth, and I do kind of find that interesting as the performance is increasingly being concentrated, not participation, performance increasingly being concentrated with the largest names within the growth theme. And as I said, futures do point to a higher open here today. Digging in to the major indices from a power bar perspective, still very much skewed in favor of the bulls. The Dow adds 90 basis points, 11-1 bulls to bears. S&P 500, 161 to 57 after tacking on 96 bips yesterday. NASDAQ was your outperformer, up 1.7%, 33 to 6 bulls to bears. There are small caps up over 1%. Solid ratio there. Bonds did uptick, as we said, and materials were your best sector yesterday, up nearly 3%. And remember, that's one of our favored of the cyclical areas of the market. 11-1 bulls to bears, and according to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish. Hitting our stock of the day now. Saw this interesting setup, so I wanted to call it out. Qorvo, within the semiconductor space, QRVO closed at 131.48 yesterday, adding 2.5% rather. Qorvo is a very bullish stock, strong trend above a rising long-term trend line, strong industry group from a power bar perspective. The semis remain strong. And what I see here is we have, you can draw the line if you want to. We have a breakout, kind of check back to the breakout level, and then starting to move higher. So we have a very bullish stock outperforming, oversold with the indicator starting to move to the upside while money flow remains bullish. On top of that, the stock triggered one of our buy signals today, a relative strength buy signal. So when I see a situation like this, I think it's an interesting setup. I think if you do have room in the portfolio to add some exposure, you want to look at a name like Qorvo, QRVO, as a potential candidate within the tech space, within the semiconductors, right? So a leading stock in a leading area of the market becomes oversold with bullish money flow. If you were going to put a one-liner on it, that's what it is. So take a look at Qorvo. If you're looking for interesting long ideas, I think this one sets up nicely. Let's look at our sector tracker now, the movement of the major sectors over the last 5 days. I mean, still very much skewed in favor of the themes that we've been talking about, the themes that we favor, right? Tech at the top of the list, materials, the cyclical group that we like, comm services, holds names like Netflix, Google, Facebook, the video game companies, just continuing to power to the upside. After that, discretionary staples, industrials, and fins are middle of the road, all higher. REITs and healthcare are higher but lagging. Utilities have been under persistent relative pressure for the past few weeks, and there's energy just refusing to join the rally. So kind of dig in, look at the dynamics that are at play, and you say to yourself, is there anything out there that makes me want to change my positioning? Probably not. Are there some data points out there that raise some yellow flags? Yes, but there always are. So what do? You skirt to the relative strength, which hopefully you've already done. You have your risk management process in place, which hopefully you have. You've thought it out. It fits for your time frame, your style, your risk profile, and you ride the wave. Right? The market will tell you when it's time to get out because your risk management process will kick in, right? If you're using trailing stops, if all of a sudden you turn around and a lot of your stops are getting hit, well, that's information. And you take that and factor that into your decision-making process going forward. Hitting our industry and focus now, it's one that's a little been tough to get excited about. The Dow Jones REIT services over the past 6 months, just a mess. Lagging the S&P 500 by over 35%. And the power bar ratio, which measures future potential, is very weak. 46 bearish stocks for only 6 bullish stocks, and it is the lowest rank, 21 of 21 subsectors that we track. So some of the names there that you most certainly want to avoid, very bearish QTS, Healthcare Trust, HTA, and Alexandria Real Estate, ARE, all have very bearish Chaikin power gauge ratings. And if we look at the fund, not a lot to get excited about, right? Just simplify it, right? You have the SPY up here. You have the Qs up here. You have tech up here. You have comm services up here. What is this telling you? I'm just going nowhere fast. Very bearish ETF rating. We know the ratio. The trend is strong because it's above the trend line. But look at the underperformance. This group has been lagging the market since November. And the intensity of underperformance is actually picking up to the downside. As the market moves higher and this goes nowhere, that's continued underperformance. You don't want to own what's underperforming, right? It's not cratering, but there's an opportunity cost to sitting in a group that's going sideways while there are quality companies out there hammering to the upside. Hard for me to get excited about REITs in this environment. I get it. There's a yield component, but it doesn't offset the fact that this is a mess from a relative standpoint. Continuing to avoid that group. Let's look at what's trending now. Yesterday's S&P 500 gainers and losers are movers and shakers. L Brands up 7.25 as soft lines We're generally positive on the day. Albemarle, ALB, up 7%. Nothing company specific, but goes along for the ride with the materials group. Walmart, some news that they are on their product to compete with Amazon Prime. They're calling it Walmart Plus. Investors like what they heard there. Up 6.3%. WRK, West Rock, nothing company specific to drive that stock higher by 5.75%. And Netflix up some positive commentary out of RBC to send that stock higher by 5% on the day. Loser side of the board, Mylan got an FDA warning letter about one of their facilities. Investors take 5.4% out of the stock. Regeneron, nothing company specific to take it down 4.5%. Might be down in sympathy with AbbVie, which may be getting a subpoena as it relates to Humira. AbbVie down 3.7% on the day. What I will note here is Mylan, Regeneron, AbbVie, INSEE, nothing company specific, all part of that healthcare group, which, as we've pointed out in our notes and in our relative trend work, has been under pressure. INSEE down 3.5%, nothing company specific there. NI, nothing company specific to take 3.5% out of that stock on the day. So let's look at sentiment. We do our sentiment work on Wednesdays. We do it every day. We publish it on Wednesdays. But there's an interesting disconnect here forming once again in the equity market and in the sentiment gauges that we look at. Like a broken record, we can once again say that the equity options put call ratio remains dogmatically at a point of excess greed. Okay, down the 13-day moving average down to spot 44, the absolute number actually, which you can see here, spot 4. So just really low levels for the put call ratio as it relates to individual equities. Now, I think there's this bifurcation that's been in place for a while that remains in place as retail investors are dogmatically bullish while professional investors are a little bit more cautious, especially as we get closer to the election. And you can start to see that if you look at a VIX term structure, what you'll see is a hump in October and November, indicating that markets are pricing in increased volatility around the election. But just take a look at spot VIX here at the bottom of the screen. You can see it's creeping up. You don't normally see that when the market's moving higher, but you are seeing it here now. And you're seeing it as the put call ratio remains dogmatically greedy. So it's an interesting disconnect playing out. Tough timing tool. Again, what it is it's a framework. It's a general environment that we're in. And you utilize that by watching trends. So if you start to get your risk process triggering exits, if you see the market start to roll over and break key levels, this starts to become a factor because arguably people are not overly protected against a downside move in the equity market. Professionals are starting to add some protection. Retail certainly looks like they are not. So just something to keep in mind. All right, so let's look. I said we talk about small caps. It's an interesting development here and gets to the absolute and the relative. On an absolute basis, small caps are holding in, right? Nice rally off the March lows, goes into this consolidation, breaks back above the June highs, and we're moving sideways here. RSI is holding bullish ranges, but testing this uptrend line off of the March lows. We're still above the 50-day moving average, still above the 200-day moving average. So for all intents and purposes, this looks like a pause within the context of the uptrend off the March lows. But what's intriguing to me is the deterioration in relative strength, right? As small has gone sideways since the beginning of June, right? Large is breaking out and continuing to move higher. And we've favored large over small on a relative standpoint. That doesn't mean small can't work. We just think large is going to work more. And what's interesting is it's actually starting to feed down into the growth theme on a relative basis. Here's IWO, Russell 2000 growth, right? Consolidating as well just above the highs, but look at the relative against the SPY beginning to break down. Concentration of performance towards the largest of the large cap growth stocks is the takeaway here. Something to keep in mind as you're thinking about ideas in the marketplace. And if you have to choose between two ideas, you probably, even within the growth theme, you probably want to skirt to the larger cap theme. within growth, right? This is not to say that small growth is breaking down. It's not. On an absolute basis, it's not. The breakdown is on a relative basis. That's going to wrap us up for today. Take us for a test drive. I will be back with you tomorrow. Have a great day, everyone.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.